Maybe. Good morning. Taking a look at gold, some nice moves. Look at the same zones. This is what I mean by sometimes we don't really have to move our zones around too much, you know? We always do our top-down analysis, but this is again like another one of those days where you look at price and it's like it moved precisely off of those zones of interest, right? In terms of like optimal zones, the zones that we have marked off right now, pretty good zones. Clean reactions off of there. What's up, Brian? But all right, let's go over gold. We're gonna do some top-down analysis, but let me see something here. Because I believe later today is the Kevin Walsh speech, so something to look out for definitely later. Good morning, good morning. Yeah, price action, I mean, let's take a quick look and then we'll reset our chart and then we'll go from there. But like for example, what I'm mainly talking about is how from yesterday's session, we were on the lookout for a price to maintain a bearish outlook, at least from an intraday perspective, below the 4600s and then possibly lower if price were to be closing below the 4570s, right? Those were the conditions that we were setting out in terms of like the bearish ideas, but we very much understood that gold from a macro perspective, like on the daily, we understood that it was still bullish. It was just doing pullbacks. At least that's what it looked like on the 1 hour, right? At least with those conditions that we set out, which is basically what I just said. That way we understood, okay, that can be the ideas for the bearish side. But again, let's not forget that if we're going to be exhausting and rejecting the 4570s and we see that price, or let's say sellers are really failing to push price lower, we can be on the lookout for buys. And that's precisely what happened. Price action got to this area of interest. We watched price action. You saw that it slowed down. You saw the exhaustion. You saw the rejections. And we even set out conditions that once you saw the rejections, it would also be ideal for price to get back above the 4580s for us to see possible continuations towards the upside, right? So again, as you can see, those moves played out precisely. Even later into the session, after we were already finished, you saw continuations above these highs, and then we started to get those reactions around the 46. This is around the 4620s more or less, right? This is a few pips away from that, but it was basically the main area that we were on the lookout for, right? So now, kind of like catching up on the price action that we're seeing right now, it just looks like we did basically the same thing. We ended up getting a pullback off this zone of interest, another rejection and more exhaustion back at the 4570s, literally a replica, literally the same move back towards the highs. And now we're once again trading below 4600s. You can see how back and forth this price action is when we're looking at this on the 1 hour. But that's good for our little recap, let's call it. Let's do fresh top-down analysis, and then we'll go from there in terms of trading opportunities that we can be on the lookout for today. But let me see. Good morning, good morning. Yes, happy Friday to everyone. It's been a pretty good week in terms of the price action. You know, I can't complain about the price action. Haven't gotten too many opportunities, at least for me, like in the beginning of the week, wasn't really too active. But at least as of yesterday, it was definitely a really good trading day. Even US 30 was really good as well. I feel like gold is gonna have a bloodbath today. You could be right. I mean, if there's going to be any volume in terms of like comparing it to any of these days, it could be today later after 10 in the morning. We'll talk about that in in a few minutes because I want to go over last year's example. So that way we can see the difference in price action, have an understanding of what took place last year, and then we can kind of move on from there. But again, let's do some quick top-down analysis. I don't know why I always say quick top-down analysis. But anyways, top-down analysis, we are going to be looking at gold, starting off on the daily time frame, kind of still on a similar story of the previous days. We understood that gold was very much on a bullish pattern, let's call it, in terms of market structure. And when we're looking at this from a technical perspective, right, any way that we put this chart right now, when we look at the daily, it's, again, you see the continuous highs, lows, right? You guys get the point. So as we've explained also in these previous days, during certain phases or certain days, we can say, when we look at market structure overall, when we study price action, we see that it creates these waves. And so for the past couple of days, those have been the conditions that we've been setting out for gold, right? We've been on the lookout for continued buys, but we're not blind or ignoring the fact that gold is definitely exhausting off of these highs and showing signs that it's doing pullbacks, at least as of right now, right? Let me know if you guys understand what I mean by that, right? Because I know it can maybe sound confusing to someone that might not understand too well, like market structure, but that should make perfect sense. Do you trade fundamentals? Yeah, we can talk about the fundamentals as well, which is what I wanted to talk about with you guys, but let's go over the technicals and the price action first. So we'll just mark off the zones of interest. We have definitely some sort of area of interest around here. This is us just looking at this on the daily time frame. Again, it's around the 4660s, that major resistance on the daily time frame. And when we look at the current reactions on this daily time frame as well, we see the wicks that are being created just around these lows, which is, let me see, just to be precise, the 45.75s more or less. Yeah, just around that price range. But let's zoom in more, because again, we see the clear view on the daily time frame. Now, when we look at the time frame, again, similar story as the past couple of days. We went from a very bullish type of market structure to then price action starting to show signs that it was going to start, let's say, doing a pullback, or let's call it reversing against this overall trend. That's kind of what we've been on for the past couple of days, right? Again, still open to the idea that we can be on the lookout for buys, because that's the overall trend. But the momentum, as you can see, it's definitely shifted more towards the downside when we look at the comparison of this versus the past couple of sessions, let's call it, more downside momentum, right? Yes, we've gotten opportunities on the buy side, but they've been pretty short-lived, again, comparing it to the previous price action when we're looking at the chart right here on gold, right? So again, let's mark off a few more zones. We can see, again, still pretty clear this zone of interest. We have price action creating these highs more or less around this area. And we're probably going to refine that now on the 1 hour, but basically around that zone. It's kind of ranging in my opinion, but let's see. We're most likely going to adjust these zones a little bit. Let me change it now to the 1 hour. Again, let me know if you guys are following along, if that's pretty clear to you guys. And then we have basically repeating the story on the 1 hour, right? We've gotten some decent buying opportunities, but overall the momentum these previous days has been more towards the downside. Price action has been doing those pullbacks on gold, going against the overall structure, let's call it, which is, again, what you guys just saw on the daily time frame, with price action being so bullish. Now we can see again the momentum that we've been getting towards the downside in the previous days. We've also seen a little bit of choppy price action. Like, for example, when we were trading just around these days, let's call it, let's say this session right here, more or less around this price action, you could say it's pretty choppy, at least in my opinion. You have price, yes, you have decent moves, but they're very short-lived, right? You don't see continuations. You don't see price maybe reversing and giving you strong continuation. What you saw is price action giving you a pretty decent move towards the downside, let's call it, right? When we're looking at this in hindsight. And then again, looking at this in hindsight, what did we see? Price action basically correcting that entire move, right? And instead of getting any sort of continuation, what did you get afterwards? Another push towards the downside. So yes, now when we look at price, sure, the momentum is towards the downside, but it's the same story as this right here. Yeah, you see the continuations and the moves towards the downside, but overall, you're kind of just stuck within a range, very indecisive. This is typical behavior, we can say, during times when you have such an important speech taking place, right? Which is, it's not just the Kevin Warsh speech, right? It's more than that, right? It's the Jackson Hole Symposium, which is, again, we'll look at price action during that specific period of last year, so you guys can see the impact that central banks can have on price action, right? But again, talking about this price action, we see pretty choppy price action once again, because again, you do have the moves that take place towards the upside, but then it's the same moves towards the downside. So again, you see moves up, moves down, moves up. When you look at that in terms of price action, that's just, again, ping pong behavior, you can call it. Very back and forth, pretty choppy in my opinion. But again, we could look for some decent opportunities off of some of these zones. What we're gonna do is, like I was saying earlier, we'll adjust this zone just to be a little bit more precise. And I don't know, again, right now it just sort of seems forced to be taking trades during these types of conditions. If you want me to be completely honest, like, yeah, sure, in hindsight, looking at this, we have a zone of interest more or less around this area right here, which is the zone that we're approaching right now, right? So you can almost say that you can mark off this zone. Even if you look towards the left, just around that same exact price point, again, basically where we're trading at right now, that's an area of interest that you've seen price action react in the past as well. So again, in hindsight perspective, the fact that you've seen price do this, so back and forth, it's very easy to say that price is going to make a push towards the downside there. But it's sort of a gamble in my opinion, because again, you've seen price go very back and forth. So what you're basically betting on is that price is going to do, once again, the same exact thing that it's done before. Which again, I'm not trying to say it's not going to happen, but ideally, it doesn't happen. I would say ideally, what we start to see is, since we're stuck in a range, and we've right now just seen basically price action reject these lows and start to do, let's say, a pullback against this, let's remember that we're still, from a macro perspective, more on the bullish side. So I would say ideally, if we start to see price action rejecting this zone of interest, which is where we're rejecting at right now, that's where we could see moves and continuations towards the upside to eventually and possibly break out of these highs. That would be, I would say, a better idea to be on the lookout for, rather than trying to look out for just sells off of that area. Again, it just sort of seems like a gamble. This one would just seem like, if you do get the right conditions, right, the rejections, price action maintaining above that area, right? Like, let's zoom in a little bit more when we look at this on the lower time frames. When we look at this on the 30-minute, you can see price action basically creating a support just around this area of interest. Looking at this on the 15-minute time frame, you're starting to see the exhaustion, right? You see price action pausing just around this area basically after doing this pullback, right? So that's why I'm saying, okay, if we can continue to reject that zone, we'd be creating still this bullish structure even on these lower time frames. And so we ideally look out for continued buys and then further breakouts, right? Level by level. We'd be on the lookout for those price points. So look at this even on the 5-minute. Yeah, 5 minutes, same thing basically. You had already price action basically get to the zone, and look at the amount of ranging that you had there, right? Any way that I paint that for you guys, you see the ranging, you see the reactions up, down, again, very mixed overall, basically still maintaining above that area of interest. Let's see if we can, again, to repeat myself, that would be some ideal price action right there. If not, I would say it's just gonna break these lows, continue to range not really ideal in terms of optimal or good price action. Let me see, taking notes, nice. Do you trade fundamentals? Yeah, like I said, we always have a fundamental understanding, and recently we've understood why it's been more on the bullish side as well. But let me see, what actually wicks represent for you? I mean, wicks is really the area where you see price attempted to go, or where it went to, but it basically rejected that area. Candle closures is where price, you can say, where it really had that price agreement. You know, that's why it's always good to wait for the candles to close, right? But wicks, again, it still represents where a price at least attempted to go. It's good to use, especially when you're looking out for rejections and you see price wick into an area of interest and reject. And then that's when it's still giving you, in terms of price action, still giving you confluences that are in your favor. Let me see. How are you able to figure out which are the areas of interest? It's really just looking at price action. And for the most part, I would say it's looking to the left, because when you are able to look towards the left and see the previous price action and see the previous reactions, you know that you're basically creating a thesis and an idea based off, you know, history. You could almost say it's like based off data. That's why I've always said that I enjoy trading fundamentals and technicals, because it's data, right? It's real. When you look at price action and price itself, that's why, you know, supply and demand, support and resistance is such a useful tool, because it's, again, it's really what the market falls down to, right? Buying and selling. So when you look at those areas where you see buyers agreeing to maintain price below or above, then you have an understanding of, okay, above this area of interest, look at the past. You've seen price action move towards this next area of interest, right? So it's not like you're just creating stuff out of just thin air. You know, you're at least able to look at something, see the previous reactions, and then have an understanding of that, right? Like I was about to say it's not obvious, but it kind of is obvious, the reactions that you see just around this zone of interest, right? Like, again, that to me, when you look at that in terms of price action, it's you can't ignore that. You know, you can't ignore the fact that price, after it created, let's say, the closure and the agreement that price, again, the sellers agreed to keep price below this area of interest. Look at the reactions afterwards, right? You had price get to that area of interest, attempt to get above, but couldn't really agree. You didn't have that agreement, let's say, from the buyers to keep price above that. And then again, you can see the pushback from the sellers off of that area. That's telling you that sellers are stronger at this zone of interest during those times, right? That's why you use kind of price action to your advantage, right? It's not a perfect strategy, a perfect concept, but it's a pretty simple and basic idea. And when you look at the market, again, it's obvious, right? Like when you look at every other strategy and every other thing that, let's say, any other trader does, at the end of the day, it falls down to price, you know? No matter, really, at the end of the day, no matter what you do, whether it's ICT, even order flow. When you look at order flow and you look at the levels that you're looking at the end of the day, it's going to be almost basically the same levels, right? You're kind of just looking at it through a different lens, but it's still going to be same buyers, same sellers at those same areas of interest, you know? It's sort of why I would say using price action is so good. And again, you see the previous reactions. So now you understand, okay, it's below that area of interest where, when you look at the past, you have seen moves lower. And therefore, you can create the thesis that if you're closing below this zone of interest and you look at the past and you see what's happened before, and you understand that the market is just kind of behaviors being repeated over and over and over again, then you get to add probabilities in your favor and say, okay, we're closing below this area of interest. Sellers are agreeing to keep price below that zone. That means we could see a push lower in terms of price action and those ideas that you're talking about. And again, that's what you saw, right? Versus right now, you're closing above that area of interest, right? You're staying above that area of interest. Same zone, but now it's on the opposite side. Now you, instead of saying, okay, you have strong sellers at this zone of interest or below that, you're actually saying, oh, right now you're seeing buyers push back off that zone. Right? So again, giving more dominance, you can say, to the buyers that are keeping price above that area of interest, right? So again, that's where you kind of create those theses from. So when you look at that, in terms of also combining it with what you do in terms of risk management, excuse me, you then look at risk management and you realize, okay, those are the optimal zones where in the past you've seen buyers step in and you have little room for error, and then you have a, like I always tell you guys, you have more room to be able to gain and profit, right? That's sort of how you get your zones of interest. That's where you then get to make the decision and understand, you know what, that's where I would want to take a trade on that specific side of the market, right? Because of, again, based off previous price action. Same thing we saw from yesterday. Same thing you could have done overnight, you know, during late Asia, during early, this was earlier pre-London hours. You could have been looking at the same price action, same thesis, same ideas. It's price action. It's the same prices of interest at the end of the day, you know? If you understand those interactions and you understand how to understand the flow of the market, that's where I would say price action can be very useful to a trader. Let me see. Oh, I see it now. I mean, yeah, the zones are clean. And again, it's not to add certainty, but it's to have good ideas as to where you've seen good reactions from buyers or sellers before, right? And that's why I always tell you guys, you at the end of the day have to pick and choose what you are comfortable with doing, with what you are comfortable with trading. I could be telling you, be on the lookout for buys off of this zone, but you could be looking at the same zone, same analysis, but your thesis and your view, and from your perspective, you think, no, probabilities are more on the seller side. I'm gonna look to take advantage of the sells, right? I'll show you guys how I used to be able to put together like the technicals and the fundamentals, and that's where I kind of created the theory of like a price action, or the charts is kind of like a scale, and you either add things to one side or the other. When they're very neutral and ranging, that means you're adding things to one and the other, so it's very balanced, so you get neutral and ranging conditions, right? That's kind of like how I started to understand the importance of having a strong bias. That was my discovery, let's say, also of having the importance of being able to have more fundamental idea or more fundamental backing behind trades, right? To be able to add or take off of that scale. That when you look at the market, you understand, well, if the scale is on this side, on the buyer side, most likely price is going to go up. If most likely price is going to go up, where could it go up from? Where does it need to break above for me to confirm that idea? Once those ideas are giving me those, or once I'm getting those confirmations for those ideas, that's where entries come in, right? That's where you're able to then say, okay, I'm putting 100, 500, 1,000, whatever it may be, whatever type of trade you're willing to risk. And then again, you have your understanding of risk management, stop loss, and those sort of things. Let me see, Tales of Imuko, I'm glad. And yes, at the end of the day, it takes discipline, consistency. Sounds cliche, and it is, but it's really what it is. Do I know Trader Nick? I've heard of a few people that have different softwares in the space. There's a few good different softwares, I would say. Which is the king of markets? Fundamentals, order flow, price action. I mean, I would say those are all pretty good tools. Like having an understanding of fundamentals had like I've it's again one of my favorite quotes is that what moves the market is money, and what's moving this money is information, right? And what information is in these markets, it's the fundamental information, right? That's something that's very important for everybody to understand, especially I've actually just made a video talking about that sort of subject, right? About the importance or the importance of having the understanding that you're trading, the powerhouse, the daddy of currencies, right? The US dollar. So when you have an understanding of the US dollar, which means have an understanding of interest rates, have an understanding of the current state of that economy in terms of the employment rate, in terms of the inflation, right? What is the central bank focusing on? Is it in line with what the current political party is doing, right? Things, let me see. Yeah, exactly. And just events in general, like, on the geopolitical side, you have wars. You have not only wars and conflict, let's say on the scale that we've seen with, Russia, Ukraine, when you've seen with Israel, Gaza, when you've seen Israel, Iran, and the US. We also have trade wars, right? You just saw that take place with the tariffs with Trump, right? Trump, the tariff man. Again, that back and forth with tariffs, that's still on the geopolitical side. That's a fundamental event that is impacting the market. It's impacting this, let's say, the investor behavior, and it's impacting the flow of capital. Remember, when you're looking at the markets, you're looking at people trying to make money, right? So that means that they're trying to make money here, money there. It doesn't matter. We're buying and selling wherever we believe there's going to be more return, right? So that's where you have these trends getting created because of, again, those institutions and these investors that have the means and the capital to have, again, an impact on the market. They're all doing, you could say, almost the same thing. They're the ones doing those transactions back and forth. Do you trade US 30 and gold with the same strategy? I mean, to be honest with you, I don't trade US 30 that much. And with US 30, mainly what I've done has been, I would say, almost on the breakout side, which is not really what I'm comfortable with, but with the volatility that US 30 has, that's sort of what I've been comfortable with taking trades. The bounce plays are a bit on the aggressive side. So it's kind of like easier to take more breakouts when it comes to US 30. But again, because I'm not too comfortable, I'm not really the best in terms of breakout trades, or not even that. It's just I'm not a fan of breakout trades because it's more scalping, and I've always tried to be more on the intraday side, even sort of steering into holding trades for hours at times, more on the swing trading side. Then it's, again, that's why I always just stick to gold, and gold just gives clean setups. I have a clear understanding of what's going on the fundamental side and why certain ideas make sense, why others don't, when it's good to adapt, when it's not. US 30 seems like when you try to set up an idea, NYSE opens and you push past 3 levels that you had marked off precisely and cleanly, and then in like 30 seconds, price action just completely rips through that. So it's a little bit more, it's something that you have to adapt to, right? It's not something that you get to just go on and be like, okay, same thing here. Nah. Am I the CEO of Gates? That's crazy. I would agree. I would agree with that. The things that I talk about, people definitely charge money. I've myself have charged money to do the things that I do now for free, you know. So trust me, I know what I do is valuable. That's why, and I always tell you guys, I appreciate you for being here because people take for granted the things that they get for free. That's why I was honestly not a big fan of doing things for free, because I always thought people that do things for free, it's kind of like people are not going to respect that work. There's, for some reason, you respect work more when you put money behind it. When you pay for something, you're going to put a little bit more effort to get something out of it, versus when you just click a button and it's just there available to you, you're going to take it for granted for the most part. Range chop loss, yeah. The stream isn't that delayed. I see the stream. on my end, it's honestly, it used to have a long delay. If it has a long delay for you, make sure you click live on the button on the screen. Sometimes when you have, it's happened to me, even here, where I'll look at it and it'll be like 1 minute delayed, and I'm thinking, damn, what the hell is that 1 minute delayed? Like that's too much. That's pretty bad. And then I'll look at the screen and I'll realize it's not on the live side. So sometimes little internet glitch or minor internet glitches back you up 1 or 2 seconds at a time. Before you know it, in 30 minutes, by the end of the stream, you're delayed, a whole 30 seconds, a full minute. So make sure you're always on the live. If not, you should be good, because I have it here pretty good. Let me see. Coach Allen. How are you? How are you? Once you have a strong bias, do you enter off the 1 or the 5 minute? I would say either or. I more so look at price, like, just to give you an understanding and to give you a better answer of that, and to kind of, for you to understand the thought process behind it. Once you have a strong bias, let's say off of an area of interest, and you're still waiting for that candle to close or whatever the case may be, right? You kind of don't even need the lower time frames. You could just have an understanding that, okay, if I'm looking for a rejection off of a certain area of interest that I already have the 1 or the 4 hour in my favor, as soon as price action gets to that zone of interest, kind of doesn't matter what happens on the lower time frames. If you have a good bias and a good idea of what you're doing, because you already have confirmations backing you up, again, you should be able to enter no matter what time frame you're looking at, right? So again, what I'm trying to say is focus on having the importance of looking at your prices and trusting your zones of interest, right? But let's do an example of why the lower time frames are good. I would say the lower time frames are good because, let's say you had the idea earlier on, as we were talking about, as we were doing the analysis, price action was kind of already rejecting this zone of interest that we were talking about, right? We had marked off these previous highs. It's where price, you saw in the past, have very strong buyers come in. And then just a few pips off of that zone, it's where you saw price action after doing this pullback. You started to get a bit of reaction, a bit of support being created. So you could say that just around this zone, again, if you had the idea to take trades off of that zone of interest, on the lower time frames, you're able to see how, for example, on the 5 minute, you have price action, let's say, closing below these lows and actually showing signs that maybe price could be doing a pullback. But then just afterwards, you're seeing price action engulfing and rejecting and closing back above your area of interest, right? So when you look at those extra confirmations, you don't have to rely on just looking at price and like trusting price itself. You can, again, look at the lower time frames and you see that, for example, you created a low that would be, I would say, a decent area where you can be on the lookout for a stop loss if it makes sense with your trade, right? Depending on what type of trade you're looking for, see if the risk to reward, allows it. See if you have the range for you to take advantage of the opportunity that you're looking for, which, again, we're doing hindsight analysis here, but it's the same thing as we were doing basically yesterday, right? When we look at price action from yesterday, same thing, right? You had the idea to be on the lookout for buys off of this zone of interest, right? But when you see price action give you this sort of behavior, honestly, we could show it here. When you look at the lower time frames, and again, you have an understanding of the zone of where you would be on the lookout for a certain trade, right? Whether you were on the lookout for sells or whether you were on the lookout for buys, depending on what your bias, your thesis, and again, what we've talked about before, right? But on the lower time frames, you see that as price action is nearing these lows, again, you see the strong momentum. This is exactly what we were talking about yesterday. We saw strong momentum and we see areas of interest start to get created. You have these highs that price created and you pushed lower. You pushed lower and basically created, you can say, these lows, right? It got a little bit below that, but that was pretty much short-lived didn't really have a strong push lower. It just kind of pushed there, but rejected heavily. You continue to look at price action, and you see that price again overall staying still above that area of interest. You then have price action again. Remember those highs. So you can set up thesis that if you don't only want to trust looking at price, you could say above this zone, which literally we talked about yesterday. You could say above that zone, once we start breaking above that, or if we get a candle closure above that, I'm going to be on the lookout for buys off that area. And look at the 5-minute, for example, whether it was, we can clear this. You had plenty of examples in terms of like, you see the rejections and you see the candles closing bullish and engulfing. You see once again rejections, and you see engulfing candles, right? Again, you have more factors and more confluences that you get to add to your trading if that's what your trading plan, let's say, allows it to do, right? If that's what you're looking for. If you're looking for price to reach a certain zone and you look at price action to do maybe a certain pattern, right? This is where I would say market patterns have a pretty good let's say validation almost. I don't know if that's the right word, but basically what I'm trying to say is that when you have price do certain patterns at areas of interest and you see that over and over and over again, this would be something that you see a lot of times. You see, for example, price, actually I just realized as I was saying that literally right here, look at the push. But when you see the push and price slowing down and the momentum dying out, if you look at those areas of interest, like for example, these highs, despite the push lower and the momentum towards the downside, you understand that if you start to break above this zone of interest, you could see moves take place towards the upside, because now you would have price action basically showing you that it's shifting potentially, right? You still got to set up conditions that if you are breaking above that, you would ideally break above, stay above, and then that still gives you confluences that you're going to continue towards the upside. Same exact thing happened right here. Push lower, the highs, push lower. Price action, the momentum is still towards the downside. You still have those highs. Look, as soon as you break out and close above that, look at the push. It's literally the same exact thing. Same exact thing. Push, break above. Does that make sense? That's right there an extended answer to your question, Kim, and why you use the lower time frames to your advantage. And it's especially useful, I would say, when you're trading more on the scalping side, when you're trading not on just on the scalping side, but also trading during your during a specific session, right? I would say you can get away with just looking at price more when you're more on the intraday, when you're more on the swing trader side. You know, at that point, you're not too worried about what's happening on the lower time frames, because you're really basing your trades off of a 4-hour, key candle closure and things like that. So it's kind of like at that point, when you're looking at the daily and the 4-hour constantly, and that's where you're taking your trades from, you're not worried about the 5-minute, right? So at the end of the day, you have to understand if whether or not that tool, you can say, is going to be useful or not to your trading, Let me see. Yeah, we'll do US 30 analysis a little bit closer to NYSE open. But yeah, good point. The 4-hour candle closure. Yeah, 4-hour candle close, still rejecting that zone of interest that we have there. Again, price action still very much in ranging conditions, in my opinion, when you look at price. Very, very back and forth. Right now, what's good is that we did reject off that zone of interest. But again, we had marked that off as we were doing the analysis there, but we understood why in the past it would be good to have marked that area, because you see it as previous support and an area of interest that you could have used. Same thing here. Price action breaking below, retesting, staying below. Once you do get above that, again, that's where you got that. That's where we got that thesis from, let's say. Let me see. Just want to say thank you. I appreciate that, my friend. I very much appreciate that. A little delayed. Yeah, I mean, the stream, no matter what, is always going to have a small delay. I've tried to bring it down before. Let me see. Have you ever full ported? I mean, I guess you could say I have. But yeah, I mean, it's not important. I did that early in the trading stages when I had no sort of trading maturity whatsoever. Once you realize just how silly that is, you stop doing it. I would hope. You gotta be professionals here. That's what we have to do. Let me see. When I am trading with live accounts, I suffer with greed and over trading. The psychology part of is the toughest. Did you face the same? Yeah. I would say most people, if not all traders, especially retail traders, go through the same thing. When you finally have a strategy and understanding of something that you're doing, it goes right out the window once psychology just goes bad. So, yeah. Psychology is nothing you can say if you don't have a strategy, but that's why you need a strategy, but you need psychology. You know, you can't have one without the other. It's a good combination of both. Strategy comes first, learning and having an understanding of what you're even doing. Then throw psychology onto that, because then you get to test what it is that you even learned and what you're doing. So yeah, let's go on to US 30. Let's see. Let me see what Zwan got. US 34 hour is stuck between a range. Yeah, in hindsight, looking at it right here without even adjusting the zones, sort of similar with gold. It's kind of like reacting around the same zones of interest, right? Like you could almost say, right, that's all we really got to do, add this zone of interest. And when you look at that, similar or same thing, right? Just ranging, stuck between two areas of interest where it's just kind of failing to get above. I would say it's, again, typical behavior before such an important speech, which is the Jackson Hole symposium later. But let me see, US 34, I was stuck in the range, the obvious resistance level at the tops, and then if you mark out the 15-minute orb from Monday, bounce perfectly right back to the resistance. Once we get a breakout either side, I think it's gonna move like, I mean, yeah, I would hope it's definitely giving that sort of vibe. And when I was first looking at it during the earlier this morning, it's kind of the same idea that I was on, but that rejection once again. Because I was thinking, damn, we're gonna maybe, you know, we're ranging, but little by little, we're still rejecting this zone. We can continue to push towards the highs, but we're still rejecting. Let me see. So first I need to fix my psychology to refine my strategy. Now I would say focus on having a clear strategy first. That means you've studied concepts. That means you've studied strategies, you can say. I don't think it's good for you to go and study strategies. I think it's more so, it's good for you to go and understand price, understand and have fundamental awareness. And then from there, build a strategy. You know, building a strategy, I think it's the easy part once you have understanding. If you have understanding, you know exactly what you're doing. Because again, it's not that difficult. It's buying or selling. It's at the end of the day, that's really what it falls down to. You're either buying or you're selling. What you need to figure out is how you're coming up with that idea and that thesis, you know. Once you have that, then you go on to, okay, well, if I have a strategy and my strategy says that it works based off the backtesting data, based off the analysis that I do, but then when I take trades, my psychology is super bad and I'm getting emotional, I'm getting greedy on the days if my strategy says only take 1 to 2 trades, but then I look at my journal and I took 5 or 6 trades, okay, what is it that you need to fix, right? Is it your strategy or your psychology? Obviously, like that at that point you understand, well, dude, I have to stop with this over trading. How do I need to fix that? I don't know. Step away from the market when you're done with your two losses, when you're done trading, even if it was one win, even after you win, you could still get greedy. You could get one win, still take more trades, lose it all. If you have that written down on your plan, you get to see that and understand, okay, well, on the days that I win, I keep trading again and I keep losing. Next time when you go on to trade, you have a clear understanding of what to do. I'm gonna go to look to take a trade, 1 to 2 setups, depending on whether I get a win or loss. Okay, today I got a win. I'm done trading. Because what does my plan say? Call it a day after, right? Like that's what your plan is supposed to do. It's kind of like if you could put your plan on a computer and only the computer did it, let's say a computer that's perfect and has no emotions, you got to ask yourself, is it going to be able to actually get profit from the market, right? Like that's how you can say you have a good strategy. But because we're human, emotional creatures at the end of the day, fight or flight mode, we make silly decisions when it comes to trading. But yeah, without doing too much analysis on US 30, again, guys, it's sort of just price action, pretty stuck within this area of interest. I would say to have still a clear idea of overall what it is that we're looking at. We're looking at still bullish structure, right? We see price action clearly creating highs, lows, attempting to create highs. So that's what we're going to continue to look out for. We're going to look out for price to, if anything, do a pullback. I would say be on the lookout for rejections off this area of interest or take continuation buys above this zone. That means our adaptation would be if we get candle closures below this zone. That means that, again, looking at previous price action, when price has closed and traded below this zone of interest, what has taken place? You've seen sells take place, right? You see it right here, 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 here, right? You see sells take place. That's why you could have that adaptation point, right? After you get the candle closure below. Not a rejection, because rejection is going to keep us on the bullish side, and that's what we'll continue to look out for. I would say ideally at this point, if we look at these lower time frames, again, we're still on the bullish side, especially after seeing such a strong bounce. I would say if we can continue to stay above this zone, that would be basically around this median point with between this range, we can still be on the lookout for further buys, or I would say it gives us further confluences that if we continue to break out and just bounce off this zone, and then that gives a stronger probability to actually break out above the 53,700s on US 30. If we start to see that just gives us again another clear idea as to what to look out for. Doesn't necessarily take a trade off this zone. It could just mean that, okay, if we continue to reject this area and break these highs, especially going into NYSE opening, I'm thinking we could see a move higher. Again, that does not take away the chance of price doing whatever it wants and breaking these lows. But again, you have to pick and choose what side you're going to look to trade on. And so that means you're only looking for confirmations on the buy side. That means anything that goes against that just means don't take a trade. It should mean it should mean manage your risk, right? That's what you guys have to understand about picking and choosing a bias, right? And again, I just talk based off my own experience, based off what I did, and assuming that, again, because we're all humans, we've kind of done basically the same thing, you can say. We commit the same mistakes, talk about the same things, right? When I used to pick a bias, I would pick one bias, and if price went against me, at that moment that it went against me, rather than trusting my bias and my idea, I would immediately look to switch. So for me, I always had the idea that I had to trade, and if price action is not doing what I wanted to do, because I want to buy, then that must mean it's going to go the other way. So that must mean I should take a trade on the other side. And it does not mean that. You have to always pick and choose what best fits for you for that day. And you set those conditions straight. And once you have that, it is your job to sit in front of the chart and only look out for that. That is why it's so important to have, let's say, a strategy, right? That's why you get to a point in trading where it becomes simple, right? And easy because all you're doing is the same thing over and over and over again. That's when you sort of say you get that cheat code, right? That's when trading becomes really like mind blowing. You're like, what the fuck? What am I doing? Like, you know, you go literally from not making money to then making money, and your ideas are paying you, and you're doing what's right, and when you're doing what you have to do. On the days that you're wrong, you look at your trades and you're like, holy, I was about to curse. But right, you look at your trades and you're like, damn, I'm taking losses, but then look at my winning days. Bro, those losses doesn't even matter, right? Like, it doesn't even, who cares? I took what, one loss? I took one loss, one win, and I'm way up for the week. What am I doing taking 5, 10 trades for the week when I can take 2 trades? One can be a loss, one can be a really good win. I can call it a week. Stress free, you've made money, right? Like, it doesn't have to be a mind blowing and like life changing money. It doesn't have to be always that, right? And there's magic and there's beauty in just consistency and building an account, and even just like, again, putting a few thousand into an account and being able to keep that and grow it, even if it's slow, slow, we say. On the day trading side, on the retail space, like, bro, these opportunities are huge when you compare it to like investing and gaining 1 to 2% on an investment at the end of the year. With trading, bro, there's a really good amount of return if you understand what you're doing, if you know how to protect your capital. Trading is, once you see it in that way, it just becomes a different game, you know? Yo, the big boy is funny, dude. Yeah. Rule number one, protect your capital. I would agree. It was sturdy. Yeah, I mean, that would be ideal. That would be ideal. A breakout above the 53 700s, holding above that zone. Let's see in the past. Because, yeah, it's a strong rejection zone. Look at the past. Like, look at those reactions, man. So we need to make sure we break above, but stay above. If we cannot stay above, you see what happens in the past. This is what we want to see. We want to see the break above and the staying above, right? No engulfing candles back below. It's just one candle close above, next candle just goes. Even with this gap lower that you had here, still in the follow through, candles closing above, maintaining above, you have that push above. And once you start seeing engulfing candles back below that zone of interest, be on the lookout of what can take place, so that's kind of the idea today going into right now. NYSC. We'll talk about Jackson Hole in about a few minutes. Let's go over NYSC Open, and then we can talk a little bit about that. Let me see some here. Pay attention to US 30, guys. Let's see here. What was that move on US 30? That's NYSE open right there. There you have it. Let me see. With $50 capital, it's hard to be on rules. One trade loss is like 20% of equity. I mean, you can find ways, believe it or not, with if you accept it, with a 50, with $100 account, you either I would say, think about your options. You can put that money aside and let it grow to a couple $100s at minimum, or maybe even $1,000 if possible. It might take time, but I would say it's better for you to fund an account little by little while you practice your concepts, while you focus on learning, while you focus on looking at price action a certain way, while you focus on maybe learning new concepts, right? I'm not sure how well you will have an understanding of how important fundamentals are. If you don't have an understanding of that, maybe look into it a little bit, depending on what it is that you trade, right? While you fund, you know, even if it's $25 at a time, $50, $100, right? No, there's nothing to be ashamed of in that sense. That's exactly what I myself used to do before, you know, because instead of trading, I used to, again, trade $100 accounts, but you don't treat it with respect because it's just like, fuck it, and you're just trying to flip it and flip it and flip it. Versus when I started to say, you know what, I'm gonna get a job, and little by little, 100, 200, 300, before you know it, at the end of a month, I've been on a demo account, but I've been studying, I've been doing everything that I need to do in terms of like learning. At the end of the month, I have now, $1,000 in an account. Guess what I'm gonna do? I'm gonna trade those $1,000. I'm gonna look to now risk $50, $100 per trade, and be as disciplined as I can with this money. When you then go into that and you realize, damn, I can't even handle $1,000. That's what, for me, always kept me so away from prop firms, because it was always like, dude, if I can't handle $1,000, how am I gonna go trade $100,000 account? It never made sense for me. But when did I use prop firms? When I started to see that with $1,000 account, I could have the discipline and consistency to just build and protect that. Even on, bro, you don't understand how proud I used to be when, for myself, I would just be break even for the month. From going from depositing money and losing to then being able to deposit money, make some, but then when you lose, you have control of the losses, and you're like break even. You're like, damn, that's not bad. I might not be making too much profit, but I'm protecting my capital. I'm making mistakes still, and that's keeping me away from building an account, but I'm keeping my profit, I'm keeping my capital, I'm still within that good range, let's call it. That's very important, and you have to put importance behind those small accounts. It takes time, but you have to have discipline behind that. Anyways, speaking of discipline, we had price action give us a short-lived move towards the upside. This is still going to be our main area of interest. I'm thinking with the way price action is flowing right now, we can still see a push towards the upside, but the 53,700s still remains our main zone of interest. If we cannot really stay above that zone, then this is what we have to watch for. If we start to break these lows on the buy side, you have to be patient. At that point, you have to set that idea to the side, because that's price action rejecting highs, breaking structure lows on the lower time frame. Again, in terms of confluences, that's not adding up to buying confluences, right? What we need to see is continued rejections, further breakouts above the 700s, and now at this point above these 740s, which is going to be these highs. That way, when we look at price action and we see bullish structure, we see highs, lows, highs, lows, highs, lows, highs, lows. We want to see further highs being created, right? We don't want to see price action reversing from highs and then breaking structure, showing signs that it's gonna pull back against that momentum that we're looking for. So let's watch that closely. Let's go to gold here. Gold is still hasn't really given us too many opportunities, I would say, because as we were doing the analysis, we did our analysis around, it was around this time. It was literally as we were doing our analysis, 8:35, 8:40. By the time we were done with our analysis, price action had already really made its rejection, you know? We were just a few minutes late on doing the analysis together with that one. And then we haven't really gotten a pullback. We're now starting to get more breakouts above our area of interest. But again, in terms of opportunities, these buys from, let's say, here to here, it's okay. You know, it would be a good scalp opportunity, but it has to be something where the conditions are you break above, as you're doing right now, you don't get breaks back below, because if you do, that means you're back within this price range. At that moment, you don't know if price is going to do a deeper pullback. That means that price has to break out as it's doing right now and give you a clean, easy push towards the highs. If it can't do that, that's not a good breakout trade. So again, that's where, as a trader, you pick and choose what you're comfortable with, what you're looking for, whether it aligns with your plan or not. Again, it does every move that you look at the chart. Just because you set out a thesis that price can break these highs and potentially reach these highs, that doesn't mean you got to take a trade there, you know? That, if anything, should mean that if you were already in a trade, that's the next area that you're looking for price to break above, for you to maybe trail your stop to that zone, for you to maybe take further profit off of your position. Things like that, right? For you to maybe just completely close your position in case you're not able to really pass that area, right? So let's see. Here we go. US 30. Let's watch this zone closely, guys. Let's see what this 5-minute does. If this 5-minute is still closing above, it's still in the clear. If it's closing below, it's just gonna do, I think it's gonna do a deeper pullback. That's where I am right now, breaking even, but no, not blowing accounts anymore. Again, that's in terms of trading progress, that's always a huge step in the right direction. In terms of US 30, completely invalidating our analysis. We only got short-lived breakout moves, barely 40 pips, or just about 40 pips. And then we've now gotten a complete reversal from the same exact area of interest, man. Look at the 5-minute. The 5-minute couldn't give us the closure, only gave us a wick. And I was trying to trust the buyers, but seeing that rejection, and obviously now, with hindsight, looking at the breakout below, unfortunate. But yeah, once we saw a price break out and then reject, again, it makes it tricky. It makes it tricky in terms of especially holding on to the idea that price is going to do a breakout above here. Now, obviously, as you've broken below this low, you see that strong pullback. This still is the zone of interest that we could potentially still be trading above, have further pushes towards the upside. But again, that leaves us with the conclusion that anything below that, as we've seen in the past, you end up getting pushes into these lows. So be cautious of that. Now, yesterday's stream was definitely really, really good. There's going to be those days where we have very good moves take place, follows our analysis and follows our ideas. But there's even the days that our analysis, completely gets invalidated. Again, what I've always explained to people is that the good thing about our analysis session is that we have clear invalidation points, and we don't sit and try and marry an idea. We don't sit and look at the market and look at a pattern and think, bro, but look at this pattern. It should do this, right? No matter what, no matter the technicals, no matter the fundamentals, price never has to do anything that we believe it has to do, Price is its own thing, its own entity, its own creature of its own. So you always got to have that understanding. That way you can detach from the movements of this. Once you start thinking about price like that, you stop worrying so much about every movement, and it's like, oh my God, is it gonna do this? Is it gonna do that? oh wow, did you see this move up? Did you see this move down? And it's like you're so worried about everything and you do nothing. So it's kind of just like, again, just chill, do your analysis, have your clear understanding, clear conditions, follow through on your ideas, follow through on what you do. Little by little, you figure it out more and more, more and more. But you have to stop with the randomness, you know. Not saying anybody here is on that, but if you are, let that be a message for you. LOL, we should avoid Fridays? Nah, I don't think so. I don't think there's any reason as to why you should be avoiding any trading days. Remember, it all falls down to fundamental context. Like, yes, patterns get created. Yes, there's tendencies within the market, but on certain days you have certain moves take place. But at the end of the day, it falls down to fundamental context and what the market is pricing in. Speaking of that, the pullback, you could say, basically took place, not precisely to our zone of interest, but very close. We're now once again starting to trade above this area. We start to see price maintain above this zone. Be on the lookout for those further moves towards the upside there. I would agree with that analysis, you know. If you're just trading below that, then again, that's just price action giving you further reversal of confluences and not what's ideal. We need further 5-minute candles, which would be in the next 2 minutes. If we can have this 5-minute candle flip and start closing above here, then we know we're still in that clear range. Anything below that, again, it's not really. Let me see. Nowadays, the markets don't care about FOMC, CPI, unemployment. Trump's tweet is the real deal. I mean, nah, I would disagree with your statement right there. I think the market cares most about FOMC, CPI, unemployment. The thing about this is the key difference, and what I would say you want to understand about that is that when Trump tweets something, a lot of times it's sometimes you could say it's real threats, other times it's going to be just empty threats and just words. But because the market is so speculative nowadays, and it's always trying to price in and it's always trying to get ahead of the edge, when Trump tweets something out, the market is moving off of a certain expectation and it moves quick. It moves right now. You know, this is why you gotta have clear understanding of what certain events mean to the market. So when you see these moves taking place, you're not caught off guard. You have an understanding as to what the market is pricing in. Now your goal, now that you have that understanding, you have an idea of what the market is likely to do based off of that piece of information. You then connect that with, obviously, with the technicals, and you then decide, how can I take advantage of this trade? How can I take advantage of this move? But because it's news and it's happened right there, and the tweet just happened and the market is pricing it in right now, a lot of people will look at that and think, oh, damn, like look at the manipulation that Trump is doing, right? And they think that it's all just for pure manipulation and whatever it may be. But again, it's just, at the end of the day, it really is not Trump's fault. It's just it's the market's fault, I would say, that it's so speculative, right? But the thing about FOMCs, CPI, unemployment, is you got to have an understanding that first of all, it's planned, right? So that means that when it's planned, the market has been pricing in that idea way before it happens. So when you're talking about FOMC, or even like today, we have the Jackson Hole Symposium. When you're talking about that, that's something that's been the talk of the market. We've been on the focus of what interest rates might look like at the end of the year, right? That's where you talk about the hawkish or the dovish tone from the Fed. What are they looking at right now, right? So when you have those ideas already planned and the market already pricing that in ahead of time, on the day of, if you don't have anything new, then that's where you don't see strong movement. Because again, it's nothing new. The market already knew this. Now the day of, finally on the CPI, that same idea that the market has been pricing in gets confirmed. Again, it's nothing new. The market is not interested in that. So that's where you see the difference in a Trump tweet versus a CPI. you know? But don't be mistaken. On a CPI day where you see a surprise CPI, on a FOMC day when you see a surprise hawkish or dovish tilt from the Fed, that's where you see moves. And you don't just see moves for right now, in like the first couple of minutes or for the next hour. You're gonna see moves for the next weeks. For the next couple of months, you're gonna be on the same exact idea. So that's where you got to have that key understanding. That's where you got to separate yourself from the masses in trading and realize that these markets, there's got to be a macro vision, you can say, you can call it a macro understanding of where price is likely to be. And you got to have that professional awareness, you can say, and understanding again. So that way you can look at price action and have a clear understanding that, okay, despite some days that price is doing pullbacks against the overall idea, you know the phases of market. You know what you're looking at. You know what you're focusing on. So when you're looking at price action and it's doing pullbacks and you're looking to take a buy at a demand zone, it's not a crazy idea. You're just studying price action and you see that in the past, when fundamentals have been bullish and price has done pullbacks and you're rejecting support zone, you have confluences and confirmations in your favor that you could see continuations and pushes towards the upside. That would be a good idea as to why you're taking buys, wouldn't you say? You know, so again, those are your key ideas, let's say. I miss my big boy Powell. Yeah, Powell was definitely good to have around because Powell always had something to say for the most part. You know, he was I had a good understanding of Powell because Powell was either very much on the data dependent side or he had one idea and he would go for that fully, you know, and he would deliver that message clearly to the market and the market would basically price that in perfectly for the most part. You know, you can never, you know, precisely understand every tick movement, but you can have, I guarantee you, you can have a fundamental understanding and an idea. You can close your eyes and understand where price is likely to go depending on the asset class that you're looking at with just having a fundamental understanding. Do you know how useful that is to trading? You can't look at one pattern and think, oh, price is going to do this, because no, that's not the case. Because patterns always make sense after it happens. You know, after you see a double bottom, you think, oh, it was a double bottom, it had to bounce. And it's like, no, it didn't. You know? So it's kind of like when you have a fundamental understanding, though, you think, hey, I'm bullish on gold because of these reasons, or I'm bullish on Euro USD or GBP USD, USD JPY, and you give all the fundamental reasons, close your eyes, come back in 2 weeks, you're gonna most likely see price, it went that way, as long as those fundamentals stayed as the key focus. Speaking of key focus and key fundamentals, yes, we did see another minor push above our area of interest, but again, like I was talking about earlier, not really the cleanest zone to look out for trades. You can even see right here, after you broke above, we got pretty choppy, breaking above, below, very back and forth. And then you have your push towards the upside, yes, but again, not really the cleanest. We'll be on the lookout for further pushes above off of this area here. That would be ideal, to look out for. Can you make more educational videos on psychology? I got you. We're doing it step by step. I'm not sure if you have been able to look through our educational series, but it's I would say it's worth your time. All right, let's quickly look at US 30. Once again, didn't get the full pullback, but you had price get back above this zone, breaking above this area, maintaining above, and you had another push towards these highs. But again, it's pretty short-lived and pretty aggressive. Let's see now that price has now once again broken above, if we can once again reject this area. But more importantly, I want to see the breakouts above here, man. Because that way we can look at price action and we can be objective enough to say, okay, we're creating bullish structure. These are your pullbacks that took place. This is, you can say, NYC opening volatility, which was basically a revisit. We got very close to our area of interest, right? Very close, right? Like this is the overall range. When you look at that, you can basically say it precisely went to that range and rejected way too aggressive, right? It would have been a lot better if the aggressive retest came to the zone and then gave you the retest, because at least you can use the zone as more of your key area and not so much like the price range, right? So again, it got very close to the zone, but didn't quite give us the retest. Then the breakout back above on these lower time frames, as you can see, had a minor push below, as you can see that right there. But overall, as of right now, still keeping our bias bullish above here. What we need to see now is further breakouts above this zone. So again, when we look at price action, we understand that, okay, we had one pullback that took place during NYSE opening. You can say that basically after volatility settled, once you got back above this area of interest, you started to push back towards the highs. You started to then push back above this zone, and then you eventually pushed above these highs. That would be optimal price action if we can get those conditions play out. But we have to keep in mind within the next couple of minutes, we'll be seeing that Kevin Warsh speech, and it's something that we have to be on the lookout for in terms of added volatility to the market. That's funny. I forget about that. But no, I would say that tattoos don't hurt. And I say that with experience. They hurt only in certain places. But if it's just like regular tattoo on certain areas, it really does not hurt. Or I guess it really depends on the skin, man. At least that's the answer that my tattoo artist gave me. That he'll say some people, no matter what, man, if whether the artist has a light hand, heavy hand, some people just have really sensitive skin, and so their tattoos hurt a lot. For me, luckily, I would say, bro, I had solid skin, I had decent fat protecting. Yeah, it's a nice dragon. It hurt. You know where it hurt? Right here. I have a chest piece, and this like middle zone felt like my entire body was vibrating. Just that fucking hurt. That hurt a lot. Everything was like freaking neck vibrating, whole chest. And I did two back-to-back sessions, so it was like going over broken skin basically. So it was just like a bad time. That was bad. I did two 8-hour sessions on my chest. So that's my flex to people with my tattoos. You gotta go through the pain. I even tried numbing pain, and it's freaking, that does not work. When you're in pain, you're in pain. It does not matter. It numbed it out for like 15 minutes. After that, it was pure adrenaline. But all right, let's go back to price action. Let's look at something here, guys. Because again, we understand US 30. We know what we're looking for. Gold, same thing. It's just we're approaching a strong candle closure. So it's going to be very interesting this next hour here. But that's funny. That would be fun. An 8-hour tattoo stream. I'm gonna do that next time I go get tatted up. Let me see something. All right, I want to confirm something before I move on, because this is key from last year. Let me see. We have let me look up Powell. Jackson Hole speech. This is from, I'm trying to see last year. Let me see. I want to get the dates because I remember what he talked about. And to put this into simple terms, guys, without trying to get into a whole fundamental rant. So it was around the same exact date, August 25th, 28th, let's call it. We can see those are the dates. We're not gonna go precisely on the day, but we want to see afterwards. But also, I wonder if I ask dovish or hawkish. Can you give me the answer? Let me see. Boom. This is what I wanted to say without me having to go on a whole rant. Boom. Pay attention to this, guys. So Jerome Powell's most recent Jackson Hole address last year, August 2025. This year we have a new chairman of the Fed, Kevin Warsh. But last year, remember, we're studying price, and that way we have an understanding of what price may do based off the information that's handed to the market, right? August 2025, he leaned dovish as he signaled that rising downside risk to the labor market could justify an interest rate cut. What does that mean? Again, this is the key words: dovish and justify an interest rate cut. So remember what I said earlier. The idea of a rate cut alone, just the idea, not that it's literally going to happen, but just the idea that a rate cut can take place, the market is not going to wait for that to happen. The market is going to start to anticipate and go ahead and price that in ahead of time before it even happens. And sometimes it doesn't even happen, right? But before it even happens, the market is going to start to adjust and is going to start to price in that information, right? Look at August. Look at the range that price was stuck in before that. Precisely around the end of August, with a more dovish Fed, which we know historically, and this is another proof of it right here. Historically, we've seen gold turn more bullish when the Fed is leaning towards a more dovish side, meaning they're more open to interest rate cuts. That means that for today's Jackson Hole Symposium, the same meeting where they're literally talking with literally central bankers and economists getting together and talking about what they may do, what can happen if this take place, yada, 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 right? So if you have that clear understanding, again, without having to be an economist, without having to be an investment trader, and we just look at price action and we study on day trading, look at the behavior of price after those days, after a more dovish Fed. Look at gold itself. You're talking about for days, for months, the market was pricing in the idea that there could be further rate cuts later on with the upcoming FOMCs. Yes, you see your pullbacks, obviously, right? But overall, as the main idea stayed on the main narrative, which was, again, if you study gold, and if you were to, I hope, I don't know, but if there's anybody that was in my live streams last year, which was basically my private community, this is exactly what we were talking about all of last year. And all of last year, we also saw geopolitical tensions, which was also keeping gold demand very, very high. So you had a mix of bullish factors with the geopolitical tensions. You had the risk factors with tariffs and that sort of uncertainty, right? Again, a bunch of factors on the bullish side. When you look at price action, again, like I told you guys earlier, close your eyes, have a fundamental understanding, you know where price is most likely gonna go. You get what I'm saying? Look at gold. I see gold. I'm looking at it on my other screen. I see it trading above, or attempting to trade above our zone of interest. Again, it's the same thing we're gonna look at, guys. US 30, look at that bounce. Look at that bounce off of this zone. We're now getting the breakout. Let's look at this on the lower time frames like we were doing earlier. Bro, look at the precision of this zone right here. the reaction. Again, this is where I tell people again, price is the answer to everything. It gives you those clues that you need. I just explained on one end why the fundamental narrative gives you the overall macro view and the understanding of where price is likely to go. But then you understand and you look at price and you dive as low as the lower time frames, and it's again no coincidence that this is the zone of interest that price just went to and once again is rejecting. That's why we talk about where we need price to break. We need it to break above here. So that way we have further confluences on the buyer side. That means that we need to break above here so we don't face the possibility of price rejecting and doing the same thing again, which is kind of what we're seeing right now. Gold, yeah, I mean, look at the volatility on gold. You had the breakout and then boop. A little bit on the hawkish side. Let me see this. Hold up, guys. Because if we're going to be leaning on the hawkish side with this speech, then we can adapt to some gold sells. Let's look at dollar. Yeah. Dollar is having a very strong push towards the upside right now. We're getting a bit of, from what I've seen on some headlines, some hawkish comments. Dollar is having a push towards the upside with gold reacting and having a push towards the downside. Be on the lookout for further price action below. I would say let's call it the same zone, the 45, below the 45.70s. If we continue to see dollar strength and gold breaking below the 45.70s and giving us closures below that, let's be on the lookout for further sells on gold and adapt to a bearish outlook on gold. That means that for the buys to make sense here, we have to get rejections first. If we don't get any rejections, I would say remove that out of the picture. Yeah, because from the understanding that I'm seeing in the comments, and I'll read it out loud. Inflation expectations are stable in the medium term. Market prices show confidence in price stability delivery. That's where we're getting that idea from. Kevin Warsh saying in the July meeting they've favored waiting on rates. That's hawkish. Dollar still pushing. Gold now giving us that clean push below that. Let's be on the lookout for that, guys. Like we were saying, unless we were rejecting, there was no reason to be on the lookout for buys at that point once we get that fundamental shift. 45.70s right now, we are pushing 150 pips below that in about 2 minutes. Sorry, 1 minute. Straight drop. Does not care of, this is what I was explaining to you guys earlier in terms of what the market is, No matter what pattern, no matter what, on the technical side, it does not matter. At the moment a fundamental idea gets priced into the market, this is what you'll see. And this is what happens when you have a strong fundamental idea get priced into the market. But that still leaves you on the objective side of price. That still gives you clues that as long as this idea is going to be priced into the market, what does that mean for price action, right? Because again, it's a combination of one with the other. What that means for price action is you now got to maintain below this area of interest. What does that add on in terms of confluences? That's price closing below an area of support, showing you signs of further sells. You look at the left, you see a clear range where price can easily correct. You now have new targets. You have a condition of, okay, price needs to stay below here. Your new target can be little by little, you can eventually go and reach these lows as long as you continue to trade below this area of interest, right? Again, the market has to price that in. If the market is not going to have that clear understanding and it's not going to price in that information which we're looking at right now, then you're going to see most likely dollars start to reverse, gold start to reverse, and you use these same key zones of interest. If we see that maybe they go from maybe some hawkish comments to maybe they start to mix it up and they start to give in more dovish comments, and now you have a mix of comments, what are you most likely going to see on price action? You're probably going to see price reverse, because again, it's constantly pricing in a fundamental piece of information, right? So that's what's new. That's what we're getting. That's what we're going to be on the lookout for. So now we know what confluences we're waiting for. Further pushes below 4570s, and now also further pushes below these 4550s. US 30, I would say similar thing, guys. Be on the lookout for sells below your zone of interest. Because I wouldn't say these sort of comments are necessarily very bad for the stock markets in US 30. But higher rates for longer, you can say is not really ideal. So you can see if you get the technical influences below this zone of interest, we can be on the lookout for some sells as well. But all right, guys, let's see. We have about 5 minutes until that 15 closes. Oh, look at this, 5 minutes closing with a strong rejection. Again, this ideal that we trade below this. We had our breakout. Now let's see if we can get any sort of continuation. If we have a strong, let's say, speech today and a clear message, come on Monday, Tuesday, and the rest of the days, we're going to see very clear continuations. We're going to have a clear understanding of what the market is pricing in, and we'll have a clear fundamental picture. Right now, so far, we've gotten some good comments, a little bit on the hawkish side. It's not extremely hawkish, but it's still on the hawkish side. That's why I'm leaning toward more sells below the 4570s on gold. And then dollar, we want to see same thing, guys. We want to see dollar strength. We want to see now dollar trading above 99.5. So if we can continue to see that, plus 4570s also with gold, we know still confluences on that bearish side for gold. This is where now you have an understanding of what fundamentals are pricing in. Now let the technicals back you up. Don't force an idea. Again, if you see that the dollar is reversing and pulling back below this zone of interest, and then you see gold turning bullish and rejecting this area, at that moment, you can't fight the market, right? Have an understanding that maybe your idea could be right, but timing might be off. You don't know if price is going to maybe recover above the 70s, do one more push back into the 600s, again, with the same fundamental narrative still being priced in. Maybe market, again, was just pricing in that information, taking profit off some levels, goes back to the 4600s, sells off once again, but this time maybe even stronger. Again, you have no certainty as to when price is going to do what. So that's why you set your conditions based off of what price action actually does, right? Yeah, the Fed is a different game. This is why when people tell you that the fundamentals follow the technicals, it's the silliest thing that you could ever hear. Because this is, again, right, that's basically saying that the Fed is looking at market patterns and they're like, okay, we're going to make up something completely today just so price can do a double bottom and then continue to push. You see this resistance right here? That's what the Fed is saying. You see this resistance? We got to say something that price is gonna be forced to break that resistance. Like that's what you're basically saying when you say that, which is, bro, think about that. Think about how silly that is. Think about Powell behind the scenes. Guys, look at this head and shoulder pattern. So we better say something today that respects this head and shoulder patterns. Like, no, you know, that's not the case. Oh yeah, well, we've already seen some comments from the speech. That's where we got that idea to look out for those sells below the 45.70s. Didn't give the cleanest closure on that 5 minute. It was pretty aggressive. But overall, still, you can see obviously what's taking place below the 45.70s. That's us adapting on the spot at the moment it's happening. Right there, you saw again the switch of conditions, the switch of the bias. Still, again, with ideas that, okay, if you are rejecting, let the rejections comes first, then you look out for trades on the buy side. Because most likely right now, with the fundamental picture, with dollar turning so bullish, is it going to reject off of the first tap that we're going to see? That's where, again, you as a trader with experience, you get to then make those decisions. And that's why I was saying, yeah, I don't think it's going to reject. I could be wrong. So let's wait for that. What did it do? It broke below. So clearly we're on the good fundamental picture, on the good technical side. We have a clear understanding of that. As we're retesting that zone of interest, you didn't have the cleanest 5 minute candle closure, but overall, it's not like you saw a bullish engulfing candle. You get me? It's not like you saw price action right now trading above that area of interest. You're just seeing price action retested. Once again, another 200 pip push towards the downside. That's about 200 pips right there. That's more. That's 250 pips in 3 minutes. Boom. On the spot. That's how you use fundamentals to your advantage right there. But all right, guys. Once again, I think that's a beautiful way to end the stream. We adapted to some more hawkish comments, set up technical conditions, the conditions played out. You even got very aggressive, I would agree, very aggressive retest off these lower time frames. But I mean, price action speaks for itself, guys. Let me know. Let me know if that was clear. I think that was very, very clean. I think that was very. Sorry about that. Let me see. Let me know if you guys have any more questions. Just gotta manage, you know, gotta do something here. All right, let's see. Thank you, thank you. Okay, fine, fine. You're right. You're right. All right, fine. Let's do a giveaway to the person that can answer this first, as most accurate, and not as most accurate as possible. Actually, accurate, and tell me why is it important for traders to be on the lookout or to have an understanding of the Jackson Hole Symposium? Why do traders care of a Fed speech like today? Let me see who can give the best answer for that. And if the Fed, this is the second question. So that was the first question. The second question is going to be, if the Fed is more on the hawkish side, what is the usual impact of the dollar? So that's two questions right there for you guys. I'm going to ask them one more time. Why is it important for traders that trade USD and gold? Why is it important for you to understand an important speech like today's, which is the Jackson Hole Symposium? Tell me why it's important for you to be on the lookout for that. And if we have a hawkish Fed, what is that likely going to be the impact on the dollar? Sorry. All right, guys, give me the answers in the same message. Man, we missed. US 30 broke the lows and you're now reversing against it, but you had a quick move. Didn't really play out that well yet, I would say. But I think that idea stands. Below the 600s, further moves to the downside on US 30. All right, I'm gonna have to give it to Jason. From the answers that I'm seeing, Jason is the one that got both of them correct. So Edward, you were close. And Marcio, you were also close. I just think I don't think you were able to deliver the answer correctly. But Edward, you were saying that it gives clues to monetary policy interest rates. That's the perfect, beautiful answer. But you weren't able to tell me what a hawkish Fed means for the dollar. You said dovish price action. That's not necessary. That's not really the good answer. Excuse me. But Jason, which is Evil Death Beast, if I'm not mistaken, that was your name. He said they tell us about interest rates in the speech, and in hawkish Fed makes the dollar increase in value. He says increase, but I understand what you're trying to say. And it was not tough. That was literally exactly what I was just ranting about and talking about. I always do that to you guys. I always tell you guys surprise giveaways, and I'm gonna do a random pop quiz, and I'm able to see who was paying attention, who wasn't. I take my education very serious, guys. I enjoy what I do, you know? So, like at the end of the day, this for me is very much, it's entertaining. I get to make money. I'm looking at charts. It almost seems like a very silly job, but to me, it's very real, and it gives me real understanding of the world, a bit more awareness, and not being completely clueless going around as a common citizen when you have so many things happening, and you realize that all of these things are happening and taking place, and you're stuck in this regular day-to-day life, and then you realize that all these events are taking place, they all impact your life, and money is being transacted with these events. Oh, hell no. It's like, for me, that was, you hooked me right there. You got me. You get me? Because it's literally that. Again, people talk, you talk to the regular common person, and all they're gonna really be able to say about war is, man, no, war is bad. And again, yeah, war is bad. Obviously, nobody wants to see war. But the reality is that, again, war is a very real thing. War is what humans have done always. So it exists no matter our feelings towards it. And you look at war and you realize it's a profitable business. There's money being transacted during times of war. Money gets put in one place because of that reason. When you look at it that way, you realize, damn, money is just being transacted back and forth. People are making money from these horrific things that are going on. So it's kind of like, again, that's why I take my education so serious, because the things that I talk about, you can go outside of this and have a conversation with someone about this. It's not just head and shoulder patterns and double tops and double bottoms and I don't know what's going on, and complete cluelessness. That's not the goal, man. And again, where would it make money? Like, think about what we've done today and having just a bit more understanding. Again, not to boast, but it's like, yo, we had the fundamental idea at first that we're still on the lookout for continued buys. It's still being supported to look out for buys. We had our key levels marked off. We had an understanding of what price needed to do. As soon as we get key fundamental information and we see this is money right here in front of us, guys, being transacted in front of our eyes, the answer is right in front of us. We saw from the headlines, I'm not sure if you guys saw them, I saw headlines, a more hawkish tilt from the Fed. This was a few minutes before we were talking about how last year we saw a more dovish tilt, right? Obviously, different messages. It doesn't mean that for the rest of the year, gold is going to be bearish. But as of right now, with the current comments, with the current scene that we're getting, we're not seeing any sort of urgency in hiking rates and keeping rates higher. That's what we're not seeing, right? We're not seeing the Fed deliver that message right now. We're not seeing the Fed saying that, oh, hey, inflation is getting out of control. What's the clear message of what the Fed is going to do? They're going to look to most likely raise rates because their message is that inflation is getting out of control, right? That's what we've seen before take place in other speeches during other times. So today, I would say it should be no different, It's not going to be the same, but again, it should be no different. So what were our technical clues and confirmations? Okay, well, guys, yes, this is an important key zone. If price is going to be rejecting that area, okay, we might have to still be open to the idea that price action is still going to bounce off the zone. A buy idea could make sense given those conditions. But because we're now more on the hawkish side with the Fed, we see dollar was being pumped at that same time. And we look at gold and you're breaking these lows. I don't want to say the clear scenario, but what's the confluences adding up to more? The bounce play or the breakout or the trades and the sells below the 45.70s? You get what I'm saying? So it's kind of like, okay, I would put money on the fact that price is gonna reject or gonna trade below the 45.70s given these confirmations, given the recent fundamental picture, and given what price action did, the breakout, the aggressive retest, the continuation, the retest once again, precisely just below the area, just below the 45.70s. But I mean, again, price action is not always going to move perfectly. But if you look at this flow, you see lows, lower high, low, lower high. Let's continue to follow along with that. We need to see now breaks of this for further lows to be created. 45.70s continues to be a zone of interest. So when you go and you listen to all of that and listen to me rant, and then you hear my question, It should not be random. And I'm not saying you guys got to be here and pay attention to everything that I say and I'm the perfect teacher, not at all. But for the most part, you guys know we don't talk too much. That's not to do with trading. You know, for the most part, we talk trading concepts. Everything that I talk about, I guarantee you, go Google it right now and you're going to have research to go and give you hours of research for you to do. I just told it to you in a few seconds, you know? I'm not telling you to believe me, but go and study that. Go and back that up for yourself. That's why I looked up what I looked up when we were looking at this. No, we don't have to change it. But basically last year, the dovish tilt from the Fed, right? Yada, yada, everything that I was saying. So Jason, you know my Instagram. I'm not sure if you've won a giveaway before, but if you have, looks like you're gonna win another one today. If I remember. Or I would say next giveaway, let's give other people the opportunity to get the giveaway. I'm glad. Yeah, taking notes is always a good compliment. And I mean, look at gold, man. Perfect. Look at dollar. Same thing. Look at US 30. Same thing. That's absolutely beautiful right there. This is like 300 pips below the 4570s, man. Look at that. In a few minutes. Can't get better than that, guys. I'm gonna start flexing on Instagram, bro. I swear. No, I'm kidding. I'm kidding. I'm really gonna, you're gonna see. I'm gonna do my absolute best to just be as educational as I can. Let people make up their own opinions and do what they want. Because it's like, again, like I've always told you guys, where I take advantage of a sell that's 100 pips, somebody else is taking that sell and they're taking 150 pips, 200 pips, 300 pips. They're waiting for a different thing. They have different ideas and different concepts. Same analysis, same price points, same ideas, different results. Somebody else took a sell, closed early because they didn't trust their analysis. They took a loss for the day. You get what I'm saying? Like that's why we do what we do. But all right, guys, I think with that being said, we've done a giveaway. We did beautiful analysis, great fundamental understanding, great technical awareness from today's live session. Great ideas. They took place. This is nothing better than seeing an idea play out and being able to make money with it and seeing other people take advantage of that as well. Look at the beautiful reactions that we got on US 30, right? Even the same thing, right? After the same fundamental idea, after 10 a.m., same exact thing, right? It was the idea of looking for breaks and sells below your zone of interest, right? This was a short-lived sell that you could say maybe could have gotten taken out, but the overall continuation or the retry in the second attempt of that same idea from the 600s down to the 500s, absolutely perfect. Perfect. And Jason, all right, it's fair enough, fair enough. You're gonna get a couple $100 off this one, so it's all good. We'll give someone else a chance next time. And I see a lot more people being active during these giveaways. So what I would love for you guys, if possible, share this on your Instagram, guys. You know, let people know that we do daily live sessions. You know, it would be great to start getting, 50 to 100 people in these live sessions. We've gotten our live sessions, at least ours, to about I think it's like almost 50 people that we got it to one time. So I take that with a lot of pride, guys. So again, if you can share that with friends, share the Telegram, let people know that we do giveaways every week. But other than the giveaways, I mean, bro, look at price action. Beautiful, clean levels, clean concepts. Look at the candle closures. Like, even look at this 15-minute. 15-minute candle closes below. again, invalidating the bullish bias. We already understood that the fundamentals were going against us on US 30, so we understood why we could see a push lower. Now you have the technical confirmation. Not perfect. It wasn't perfect because price pushed back up, but look where it pushed back up into. It literally pushed lower, retested this structure point on the lower time frame, did not break above that. Then you had your move take place, and then you had these sells. So again, it was not bad, not bad. Giveaway again. If I see that some people tag me, how about that? We'll do a giveaway. I'll try to do multiple giveaways. Let's see. Let me see. Nah, man, come on. We can. We've done giveaways every week, and we give out a couple $100 at a time. Let me see. Yeah, we'll keep it like that for now. Next week, guys, I'll try and do multiple giveaways. But again, if you guys can tag Tarzan Trades and even the GatesFX, more so Tarzan Trades, that way I can repost it. And then that way we get more people joining the lives, more people be able to see, then you got that. So clean price action. If I win, I will tag. Okay, sooner or later. Sooner or later. No, yeah, facts, Marcia. You're close. I've seen you close. You've been joining since day one. So trust me. I've seen your name popping up a lot. But all right, guys, clean price action, great moves. You guys know what to be on the lookout for. I think in terms that, it's Friday. We already had these clean moves take place. Not bad for a Friday. Not bad for a Friday. We can probably call it a session, call it a stream, call it a day. Again, we had great moves take place. But other than that, guys, I will see you guys next week, yeah? No, but this is a giveaway that I'm giving away a couple $100. So it's not a small giveaway. Maybe not a lot of people won, but one was able to win. Let me see this. Like I said, guys, next week we'll do more giveaways. I'll try and do multiple giveaways and split the winnings. This time I felt like a surprise giveaway to someone that was paying attention to precisely what we were talking about is fair enough. Fair enough. I appreciate multiple people trying, but again, we also want to be fair to the person that was most ready, But yes, guys, thank you very much. Have an amazing weekend. Everybody stay blessed. Yeah, that was because I wasn't here. That was to make up because I wasn't here. But all right, you know what? Let's see. I'll do one more surprise giveaway. So I'm going to do a giveaway. One for Jason, one more surprise giveaway. And that's it. But obviously not for Jason. Let me know if you guys are ready. Let me know. All right, so here, I'll ask the question quick. So if during the Jackson Hole, we see that the market is expecting higher US interest rates, what's the likely appeal to gold? I'm gonna change it up with the wording. See who can give me the answer. First person to give me the answer, I'll do one more giveaway. So I'll do it again, same question, different wording. What happens to gold? What happens to gold's appeal when the market is expecting higher interest rates for the US? Let's see. There you go. Ding, ding, ding. We have ourselves another winner. I don't know your name, but Tales of Imuko. Exactly. Higher interest rates in the US. What's the likely appeal of gold? Well, if we're going to have higher interest rates, that's likely going to generate higher yields. So when you have higher yields being generated versus gold that doesn't generate any yields, the appeal of gold gets lost. Investors now look at gold and think, if I'm not generating if I'm not generating yields on gold, I'm going to put my money where it is generating yields. Because you have one that basically you're saying, I can hold gold and hope that it continues to increase in value, but I never make any money because it's not yielding any sort of interest rate. So you literally have to sell it for you to make money. You can't just hold it and make money. When you have things like bonds, that's money that's basically certain. You hold the bond and you're certain to get that yield back. So when you look at it in terms of appeal, that's why I use the keyword appeal. An investor, what does the investor think? Non-yielding asset or a high-yielding asset? Which one would you like to hold? I'm going to hold the one that's giving me higher yields. I'm not going to hold the one that's not giving any yields at all. So when you look at that as gold's appeal, that lowers the appeal. It's bearish for gold. Good interest rates, that's not really a term. There's not like good or bad interest rates. It's either higher or lower interest rates. It's all good, but there you go. So Tales of Imuko. I'm not sure your real name. So now we got Jason and Tales of Imuko, Tarzan Trades. You got to text me today. All right? You got to text me today. Tell me your client ID and then your name, so that way I know. And then I'll give you the giveaway. There you go. So that's 2 giveaways. Not bad. But that should make sense. Other than that, guys, have a great weekend. I'm about to close this chart before I take more trades. Have a great weekend, guys. Last thing I'm going to say is, again, watch out these 45.70s. Let's look at the dollar before we leave. Yeah, if we start to recover above the 70s, and if dollar starts to get back below the 99.420s, we could see another pop-up in price action. If not, other than that, further sells below this area of interest. If we continue to reject this area, we could get another opportunity to further sell off from that zone. So we need further dollar strength, further dollar weakness below here, or excuse me, further gold weakness below here. You're in the clear. Other than that, guys, I will not say anymore. Thank you guys once again for your time. I will see you guys on Monday. Everybody take care. Have a great, great weekend, everybody. Peace.